Hello, hello. Anybody can hear me? Hello, John. Hello, Nicolas. How are you today? Good morning for you on the other side. It's afternoon for me. I just want to know if you can see my, let me just put in here the chat room so I can see what you guys writing to me. Buenos dias. Good morning. Awesome. Did anybody at all was able to grab this pound dollar entry? Unfortunately, I didn't get in. I saw it, but I was doing something to the VT8 and I think I broke it. I did something to it and now the automatic is not working. I want you to try it on your side to see if it's working, but it's not working on my side. So I got upset with that and then I didn't enter. But did anybody enter? I mean, we had awesome entries between yesterday and today on pound dollar, pound yen, euro dollar also. We had some good entries. So the BTA has been giving out awesome entries lately. Well, obviously when the market is crappy, you know, we can't expect good entries. But I mean, I want to wait for see if anybody else comes in before we actually kind of start with major stuff. John, were you able to get some entries today? Or was it too early for you to enter? Nicolas, were you able to enter? Okay. Again, I'm not sure what time frames or you guys want to really trade, but I have many years of trading scalping, you know, 5-15 minutes. And even though you might think that just because you might get many entries during the day, it might be better, but there are times when I really, you know, that you might get a better entry, but it's something that you really have to determine. You know, scalping is very hard, it's very stressful, and if you really want to do this more on a long term and not be stressed, you know, I really suggest you trade higher time frames, 1 hour. And that's really what I want to emphasize here while we're trading, that you know, we actually take a look at higher time frames, and right now we're gonna go over some really interesting stuff that is going to help you a lot with your entries and how we can actually hold or determine that the market is kind of crappy and then get in and get out quickly. And then how are we going to be able to determine that it's gonna drop like yesterday, right? Like yesterday we had some really nice drop, and then the day before, or couple of few days, we actually had like a ranging market where you got an entry and then you had to quickly get out and then again, and it was just up and down from within a range until eventually it shoot out for 100 pips, which is, you know, what we want to do. We want to be able to grab all those pips like as much as we can, you know, take advantage of all of that. And you know, that's really what I want to do, you know, teach you and stuff like that. And we're gonna go over today the what do you call it? Again, the IPA, which is the institutional price levels, and we're gonna go over market gaps. Like we're gonna go, I'm gonna delete all of this, but we're gonna be able to, I'm gonna do them together. And so that way you can actually see what's going on. And we're gonna go from high time frame, we're gonna delete all our moving averages so we can actually see the market, the naked charts, you know, pretty much, and we can see what's going on. And that way it's going to be better for our eyes to understand and see the market. Second thing that I want to tell you is, I know I put it updates, and you know, we have here again the Bollinger Bands for 1 hour, 4 hours, and the daily. And then we have again, now you're going to be able to draw on your, hey Jack, good morning, how are you? We're going to be able to now draw in here and be able to kind of go back and not, so it doesn't disappear on us. And, so now we're going to have a lot of good stuff in here. And so that's it. So, we just want to make sure that everybody kind of, we only have 3 people. I want to see if anybody comes in. But Jack, were you able to enter on any trade on pound dollar, pound yen? Which pair are you following right now? Pound yen. So did you enter on that? Yeah. So we had a good entry on actually pound dollar and pound yen. We had a nice entry really early on 8. So pretty much 9 o'clock MT4 time. So that was already 1, 2, 3, 4, 5 hours ago. Well, most likely I would have taken it if I was going to trade, but since I knew I was going to have this, I didn't trade either until now. I'm not sure if we're going to get any entries because since we're trading the 1 hour, then, it might take an hour or 2 to get an entry, right? So, it all depends on that. But really, what I want you to do is, what I want to do with you guys is be able to depend and trust yourself, have the confidence on your own, and be able to enter your trades and not say, oh my God, am I doing the right thing? Am I doing the wrong thing? At the end of the day, yes, I'm going to guide you, but you have to determine yourself if it's going to work out or not. And there are times that it's not, and it's not because you're wrong, it's just because the market acts that way. So don't take it out on you just because you made a mistake on trading. And so don't beat up yourself like that. There are times, just blame yourself when you actually enter, when you kind of say, let's say we had an enter here, entry signal right over here. I'm gonna draw a line, and you see that it's working, and then you might decide to enter all the way around here. Let me just draw a line in here. Then that's wrong. You're already too late in the game. That's it. You missed your chance. So let's say I had the entry here, and then just because I see it going down, then I decide to enter halfway down somewhere in here, and then the market then decides to turn around on me quickly. So those are the mistakes that I want you to avoid. If you missed your entry, then wait patiently for the next entry to happen, right? But trust yourself, have the confidence, and that's what I want to do with you. I don't want you to think, oh, I'm doing it wrong. So right now, what are we going to do is, did you guys were able to learn about the institutional price levels and some of the support and resistance are we going to draw so it can help us out when we enter or get out in the market? Were you able to do that? So what we're going to do here is we're going to go to the daily, and we're going to go from daily to 4 hours and 1 hour. Would you guys think that if we draw a daily support or resistance, that's going to be strong, right? Or is it going to be weak if we enter on a daily or 4-hour support and resistance? That's going to be better than actually drawing a support or resistance on a 15 minutes and 5 minute, right? Do you agree? Okay, so we're having some news in 30 minutes. So obviously, that's good. We're not gonna be really trading right now. I don't think there's gonna be any chance right now. So we're gonna go from top to bottom. Top to bottom means daily, 4 hours, and hourly, which we're gonna trade. And possibly, if you wanna trade a lower time frame, 15 minutes could be good only if you have your nice support and resistance. And I would suggest 15 minutes more than 5 minutes, okay? So that's really up to you. All right, so what are we going to do is we're going to actually take a look at what happened, a little bit more in the past, because, if we do something right now, we don't know if it's going to respect those levels. So we're kind of gonna see more a little bit in the past so that we know that those levels are respected and how it actually works. And I talked to you about the gaps. There are market gaps, and those market gaps is pretty much something like this. Let's take a look at the daily first. We have here, you see these big candles in here? So we can see that there are sellers taking advantage of the market, but the market, when there's so many big candles, the market becomes an imbalanced market because if I draw a line here, if I take a look at this big candle over here, and then my left candle is a really tiny candle, and then if I look at my right candle, this gap between here, this is a price imbalance, okay? They call it price imbalance or void, so where the market needs to come back up again and fill those prices pretty much. So, you know, buyers and sellers come in and they have to fill in the price. It has to be even. Just like everything check and balance, it has to be an even number. So sometimes if you're able to see that there are candles that if you look at the right and the left hand side, they actually meet. So if you're gonna take a look at this candle right over here, this green one, if you look at the left hand side, we can tell that it's filled. And if you look at the right hand side, that is filled. That the right and the left in the middle candle, they actually meet. They already met. So this candle is filled already. I don't know if you understand what I'm trying to say. And that works mainly for big candles, obviously, because a small candle gets filled quickly. So this candle is not filled right here. If you look at your left, we're gonna draw a line. I mean, if I look at my right, this is where the market has come up. So now, if I draw this gap over here, take a look at the market. If I look now to the front, to now more present, now we can see that the market came back up and exactly filled in to this point over here to your left. So those are actually considered resistance and support. So if I would have done my homework, let's say in the past, you know, you open your computer, you go to your daily, and then you start to notice on your left-hand side that there's a gap or imbalance in price where it has not filled in yet. You know, we can tell that the market, if you draw your line, that the market has not come back in here to touch it or to fill that price. So what we're going to do is we're gonna draw a line, and then we're gonna go to horizontal line properties, and we're going to say, we're gonna color it red because we're gonna say now the red is really strong because it comes from a daily gap. So we're gonna write here daily gap. So we're gonna name this horizontal line. So when I hover right on it, it's gonna say daily gap. So when I'm looking now at the market, I know, oh, wait a minute, this is the resistance, and this is red, this is coming from the daily resistance. And then when I look at it, it's a daily gap where the market has to come back and fill in that price. Are you getting me so far? So I hope I'm not going too fast. So now that we have that, okay, great. So now that we have this in place, if you know, we can tell right here where the market actually went up and touched it, and then what did it do? It bounced off from there. So pretty much what he said, oh, okay, I'm satisfied. I filled in this gap, and then now I can come back down again to go my course, right? So once it does that, then we're good to go. So let's say we draw our you know, our gap, and then after that, we can look for another support or resistance, or we can look for other gaps that might happen, you know, that we might be able to see, you know, like this one over here, we can tell that the gap is smaller because if I have to look at my left candle to see if the right candle, they kind of meet. That is really, so the gap is really tiny. So we don't really have to worry about this. The major one is actually this one right here, and even this other candle right over here. So if we want to do that, we can just actually do that right here. And this will be another gap where the market has to come back and fill in again. So for right now, you can actually just put it in. And we're going to say the daily gap that has to come back and fill it. And we know it's a resistance from our daily. All right, that's great. Now that we know that, then we know that if the market comes back up in here, we know that this is a resistance, a possible sell entry again. Now, the second thing that we want to do is, well, let's first do the gaps. Now we go to the 4 hours, and we want to fill in the gaps in 4 hours because in every time frame, the gaps are different. And let's say for right now, I want you to take a look at here at the most current candle right now. This, do you see a gap in here? So we draw, we see a big candle, we draw a line, and then now this 4 hour, we're gonna change it up to another color. Any other color that you like, as long as you identify. So we're gonna put in 4 hour gap. So we know now that this is a 4 hour gap. And the market has to come back really close to it, if any, and then from there it's going to bounce. It has to, remember, it has to fill in all of this price because it was a void price, right? A void action in there. So the market came back up again. All right, so now that we know that, then we can just possibly go to the 1 hour and look for a gap in 1 hour. Where would you find a gap in 1 hour? Especially, we can find those gaps in big moves, big candles. So I can see that we have one over here, this other gap. If I look at my left, my right, so I see a gap. So then here I would just rename it just like that. And then I would change again. So this is 1 hour gap. And I can change the color so that way we know now this is my 1 hour, this is my 4 hours, and so on and so forth. Then each candle has a gap, right? We have now this big candle right over here that, like, if I draw a line in here, then the market got closer to this 1 hour gap, and then from there on it bounced off, right? Do you guys see that? I mean, I hope you guys seeing what I'm trying to get to you. So on. I mean, so the market likes to. So right now, I want to go back in history, and I want you to see it. Actually see how the market fill in those gaps. So, but that's how we actually fill in the gap. So right now, the market, that's exactly what it did. It went back and it bounced off. What about an IP level right now? If we actually draw another line. And remember, our institutional price levels is 200, 500, 800, and even numbers, right? So if I actually take a look at here, I go to parameters in here, and then I put 130, 200, and then if I color this one white, you're gonna be able to see that the market actually hit in this IPL institutional price level. We're gonna name this actually to institutional price level, IPL. So right there, so as you're able to see, the market came down drastically, right? Really like a big drop. And we know that the market has to come back and fill in the gap, the price. And if we draw our supports, our most recent support, where the market's supposed to come back from 4 hours and even 1 hour, then we know that this is a what? When we get a sell entry, we know this is a selling opportunity. So that way, when you get it, you don't have to doubt it and feel bad. You're like, oh my God, I did my homework, and this is, the market needs to respect it. And we even have here a 1 hour Bollinger Band. So we have so much that is pushing the market back down again to keep the course. And then that's exactly what it did. Look at that, already 50 something pips, and it just keeps on going lower and lower. With the RSI, we already see that we have a strong trend. Take a look at this is the daily candle. This is actually something new if you want to use it for yourself. I call it the daily candle, but this is the daily and the 4 hour candle. So let's say you really want to go against it, you want to buy for right now, and you see your 1 hour and your your daily and your 4 hours in red, and you want to buy. Do you think that's a good buy? Do you really think that you want to risk it? When you're going against the daily and the 4 hour candles, they're going red and you want to buy. Do you think that would be a nice buy? No, right? So now this is a really good guidance for you. Since we're not trading the grids anymore, then I decided to put in these 2 candles in here to give us more of a confirmation. Hey, I'm going with the 4 hour candle. Yeah, let's say that you got a sell entry, you're going with the 4, and if the daily candle is not there yet, it's okay. Wait and see if it comes, you know, if it gets green or blue, you know, or red going your direction, but you don't have to wait for the daily candle to turn red. So this entry was great. And then you just keep on holding until you actually, we have to look for a support, right? But so when you look at something like this, let's say you miss this entry, we're gonna analyze this entry, this sell entry over here. But right now, this sell entry, would you have entered here? I mean, we now got the signal and then it worked out so nicely. So sometimes if we wanna buy, you know, we kind of have to see if the market wants to keep going lower and lower, right? So we take a look at the 4 hours, we take a look at the daily, and then we might be able to see, you know what, this thing might just keep on going lower and lower. The second thing that I want to tell you, you know, let's say you have a signal here on this 4 hours. You kind of also want to go with the signals for the 4 hours and the 1 hour. So if you already had a signal here to sell under the 4 hours, and you get a signal to sell also on the 1 hour, that's like even stronger. You're like, okay, you know what, this thing is going down. So you can actually even label it and say, you know what, I have a 4 hour, you go to the 4 hours and then you put in another line just so you confuse yourself. But just in case if you want to do that, I mean, I'm giving you options here so that it's a reminder for you to actually see your entries that you like, shit, this is a good entry. So you put in 4 hour and then you can put in, say, a number 1 sell signal, right? And then that way, when you're trading under your 1 hour, you say, you know what, this thing is hitting a nice resistance. Let me sell too. What if you want to go to the 15 minutes? So under the 15 minutes, you got here 1 sell opportunity. The market went back up again, and then it gave you another sell opportunity. Would have given you the entry right over here. This would have been the sell entry. And it went down for 74 pips. So, but that's the thing, you kind of have to wait the price to get back to your entries. If you decide that you want to sell, then wait for that sell entry, wait for the market get to your resistance, to your nice resistance. You're going to avoid buys right now because you know that the market had to come back up to fill the price and then drop from there. That's all you had to do. Any questions so far? So where should we hold the price? So let's say if we sold over here and we like, you know, should I keep this, let this run for a little bit longer? Well, we kind of have to go to the 4 hours and maybe say, you know, draw a line here and then say you have a support in here and you can just write it up in here. I mean, I know it's a lot of work, but that work is going to pay off. Pretty much you have to think about it like that. Is it going to pay off because you're doing your homework, you're drawing your resistance, your support, and then at least you're more confident that you know where you can hold your trades or enter. So in here, you're gonna just pretty much say 4 hour, what is it, number 3, right? So that way you know, and then you can go maybe to your daily and draw, and actually that number 3 is hitting the number 1, so you know that's good. And then maybe you can draw another one here for your 4 hours, just in case if it drops a little bit more, then you know you have another support waiting for you out there. So you can just put in here daily number 1 support, right? Number 1 signal. You just have to remember that if it's at the bottom, obviously it's a support. And then that's it. And then when you go back in here, you said, you know, maybe I want to hold as long as, you know, as close as it gets to here. Maybe we already know that we are number 3 in here. Maybe you don't want to hold for that longer. You don't want to hold that long anymore. You want to just kind of see maybe somewhere around here. And it actually came just right to this point. And if I do this right now, what is this right now? It's actually an institutional level. Actually, no, that's a 300. Well, sometimes a 300, but it's not. Okay, it's not. But if we just draw a line here where this wick hits this other wick, and this is exactly what the market did. You don't want to wait to see if it breaks this support. Again, we're going against this 3. It might just bounce off from here and then go up again, but at least you kind of have an idea of what you have here, just in case, where you want to hold the trade. And then now if we want to buy, well, all we're waiting is, we're saying, okay, I have some nice support in here. If this thing gives me a buy entry, I know I have a 3 over here. I know I have this 4-hour number 3 as well. We have here this resistance. Then I can say, you know what, when I get a buy entry, I'm more confident that I'm going to enter right away. These number ones, they sometimes are tricky. So be careful with the number ones. The number ones are only good when we're following, when it's the break of a new trend. But I know those sometimes are hard to understand. So let's take a look at another one, a fresh one right now. Pound yen. Pound yen is another entry right here. So if we're gonna go back, what are we going to draw first? We're gonna go first to the daily, right? We're going to look for, we're gonna take a look at here at this big candle, and then what do we draw here? We draw in here where the market has to come back and what? Fill in the gap, right? So we draw our horizontal. I know this is work, and then just put in again, but hard work pays off. Daily gap, then we know that's good. Then we go to 4 hours, and the 4 hours also has a gap that it needs to fill in. You see this big candle right here, and we have to fill in this candle. So now I put in here 4-hour gap, and then I color in green because I know I will be able to identify which one it is. And then I go back in here, I'm looking at the drop. So obviously we look at past, so we're able to determine what we can do in the future. And if I draw in here on this, remember we're looking at this candle right here where the drop started where the drop started pretty much. And then I draw a line right over here, and this is my what? My 1 hour gap. 1 hour gap. Boom. Okay. And then now I'm even gonna make it better. Right here, we are close to a institutional level, 136. I'm gonna color it white so I know which one it is. Okay, right there is white. So when the market comes back up again, you're waiting patiently because you know you have gaps that the market came back up again to fill in, and then from there it's going to bounce. So now you have a green 4-hour gap, a 1 hour gap, we have an institutional level, and we have a daily gap right here where the market is a resistance. And what did the market do? It hit in between the 1 hour and the 4 hour, got really close to the institutional level, and then from there we got the entry, and it dropped, I think, I don't even know, from here to here, it dropped 80 something pips. Oh my God, I mean, even if we got out somewhere in between here, remember, we always want to draw either a box or those 2 lines where the market meets the body and the candle on the wicks. And then what did the market do? It just came a little bit outside of this box, and then it might bounce back again. But that would be your target to exit. Okay, guys? You have any questions? Am I going too fast? Are you understanding when you do what I'm saying, what I'm doing, so you're able to do it in the future? All we're doing is, we don't have to go so back. All you have to do is your most recent information that's going to give you your future information, so you're able to determine if your signal is a good signal to enter. What if you got into this buy signal over here? You could say, yes, I'm going to buy, but then where should you be able to get out? Somewhere in here. And if you got that entry over here, then at least you would be able to grab going up and then going down. Or you could say, you know what, I want to avoid this. I want to wait until it actually gives me another sell signal, and then I sell because I know the market is going to just to come back, fill in the gap, and drop again. Do you guys understand? Do you guys understand what I'm trying to say? Again, we also want to go with signals from higher time frames, so we're kind of going with the flow. We're going with the flow. Pretty much that's what all we're doing. So what are you going to draw? You're gonna go from your daily to your 4 hours to your 1 hours, and you're going to look for gaps. Don't get confused, you know, with those gaps. You know, if you look at big candles and if you see that the right and the left, they kind of met already, then that's not a gap anymore. That gap has been filled already. It's full. There's nothing you can do anymore. You have to look for gaps where the market actually has not filled in yet. So like right now, if I go to my daily, if the market happens to go up, where's the gap? I have a gap right over here. Because there's nothing on my right hand side. The most that it has come up, it's around here. So this gap, the market has to come back up again. And then you would know, hey, once it gets up here, then I know I can maybe possibly sell. Or if you want to buy, then you know that this is your exit point, because you know you don't know if it's going to bounce up from there, but at least you know that where should you get out. So if you can rename it and you can just leave it there for future reference. You put in daily gap, you leave it there. So you can't rename it. They know that. So you put in gap daily, and we're gonna color it red because we know it comes from the 4 hour daily, and then that's it. So now, just somewhere in the future, the market happens to come back here, then you know what's going on. You know, when you rename it, gap daily, and then that's it. Any questions? So we have our gaps. We have now our institutional price levels where we can just type them, put in here. Like the market just keeps on dropping, so maybe we can find an institutional level over here. We have the 500 over here, so we're gonna put in parameters 134 500. We're gonna color it white, and then here it is. So if the market happens to come back down here, this is a possible support where we can finally, if we get an entry to buy, then we'll feel more comfortable that this is an okay entry, because now I know that, hey, this thing can now bounce up from here. Sorry about this. So now again, we missed this opportunity. Okay, it's fine. And then over here, we would have gotten many other opportunities to sell. So I'm going to erase this. Any questions, guys? Any questions that you want me to go over, right now? Let's take a look at gold. I know gold, it's hard sometimes because this is a very volatile, but I've been loving it. I'm like, fell in love with it. And and this is all I want to trade right now. So let's say we had a number one here to sell on the gold. We have here 1 hour right here, but gold has a lot of space to come back and fill. And if you can tell, it actually has never come up and filled any gap at all. No gap whatsoever. I mean, we have like different gaps. From this candle, we have this gap right here, this big candle. We have now this big gap over here. So it has to come back up again to fill in this gap. So I'm patiently waiting for a buy entry for gold. And right now we had another sell entry, but yes, like I said, it has not really hidden any resistance that we can maybe kind of say, hey, this is good or not. Let's see if we can find anything in here. But anybody has any questions whatsoever? I mean, I want to go back a little bit so you can tell. I can show you something really exciting. Right over here, there was one. If you can tell how dropped, this is a 1 hour. the market dropped really drastically. So there was a gap that was filled in here in between. Remember, this candle went back up again, filled part of this candle, but it didn't fill in the whole candle. So from here to here, we have a gap. And take a look at the gold right here. It came back up again, it stayed in here. Now we had it perfectly stayed in here. It dropped a little bit, it came back again, and then finally it dropped from there. But this was just so strong, and then from there it dropped. So this is what I'm telling you, gap filling is really, really important. And then if I go to 4 hours, we will actually be able to tell that it was hitting a lot of resistance. We also had a number 2 sell entry that it was working within there, and finally it dropped. So if we're able to follow, take a look, and you can just draw a line here and say, you know, color it so you don't get confused. You can just say 4 hour number 2 signal, right? And then you put in, you color it green so you know it comes from the 4 hour. And right here, I'm gonna erase this bottom one. I could just say the green, the blue one, the white one is a gap that we're filling from way in the back over here. And then the green one was a 4 hour number 2 signal to sell. And then so that way I know that we have a strong resistance from a higher time frame. And then boom, what did the market gave us? A nice sell entry, especially these ones after the 3s are really nice sell entries. So let's say if you got a buy entry on this one and you accepted it, you said, yeah, let me get in. Well, it didn't work out so nicely because it just hit this resistance and then it dropped from there. If you got this buy entry over here, right over here, then you would have had this space, only this space from here to here to buy. And I actually did get in on this entry over here, was 50 something pips. I got out actually right here because I got out at this gap. You see this gap right here, this big candle, I drew a gap over here, and then the market hit it twice, and then I got out. I'm like, you know what, I'm going to get out on this trade. This was I think the day before yesterday. And then yesterday I sold over here. Unfortunately, I didn't write the whole thing, but this was a nice, you know, this was a nice entry. At least I have some space to work on. Think about it like that. If you get this one entry and you know we have a lot of resistance coming from history, you don't have enough space to run this trade. So then you have to ignore this one and then wait patiently for this number 1, which actually worked out very nice. So any questions? I know I make it sound easy, but if we actually do our homework and we see current market situation, I mean, I know some of you don't trade gold, so I'm not even gonna take a look at gold. Let's take a look at euro dollar. I was drawing these lines to show you, but let's kind of go back and draw them again. Like I said, right now we don't have any entry, so it's best to learn so you can actually do it yourself, and then you learn how to do it. All right, so we're going to the daily, and on the daily, this number 2 entry has been going since October 21st, and today is October 29th. So we know that this is from way back already. So if you draw a line here and you say this is red, this is a strong resistance, a daily resistance. So you put in daily number 2 signal. And then you look for a gap. Obviously we're hitting that, but if you can actually tell, we have the market came down to this support at this level in the daily. Obviously they happen already, but let's say we're already looking ahead. Let's say none of this has happened yet. So we have to look ahead and kind of look for what the market is doing. If you can tell this little tiny candle right here, this is a gap that the market needs to fill. So I look at this candle, I look on my left, this is a tiny, I look to my right, and then they have not met. So this is a gap where the market needs to fill in. So I put in there daily gap, and then that's it. Then I move on to my 4 hours. This is pretty much what the market is doing. And then I look for another, number 3. I type in something that is giving me something that is going to help me decide if I get a sell entry under the 1 hour or a buy entry. I can do that. So 4 hour, number 3 signal. Color it green. And then we go now to the 1 hour. And then look how many times it gave us sell entries. We got one over here under the 1 hour. We got another one over here, and then the market kept on going lower. So we had then multiple sell entries under the 1 hour on euro dollar. We kept going lower, and then now it came to this filling all this gap on the daily, and then it just keeps on going lower and lower. It keeps giving us entries to sell. Okay, guys, I mean, it shouldn't be that hard. We're already getting the signal, so you don't really have to worry about that. All you have to worry about is where the hell, if is this a good signal, where the hell I'm gonna get in and where am I gonna get out, meaning that if this signal good enough or not, right? We wanna do that. And on top of that, we just put in here, we can look for to see if there's any, what do you call it? An IPL institutional price level. So we can put in maybe here the 800 to see if there's any 800 in here. Okay, not in here, maybe a 500 in here, somewhere in here. But this is all I want you to do. I mean, and then obviously along with our moving average. I mean, I don't have the moving average right now just because I don't want to confuse you. But we always wait. So if you get a signal, always wait, if anything, that a candle closes below or that is actually going in that direction. Sometimes we get a sell signal and it doesn't go in our direction. But let's say you get a sell signal here for this number 1 right here. You have a support over here. So if you sell, you have a short distance from here to this support. Be careful with that, with those number 1 signals. Be very careful. The best are number 2s, and there are certain ones, but not all of them are good. I mean, I don't like them so much. Questions, guys? Kind of miss some good entries today. I mean, we missed this one. It's hitting a nice support over here. All we have to do is kind of wait for some time. So let's say you draw all of your support and resistance, your institutional price levels and your price gaps, and then you actually draw your lines on your daily. I mean, I know this is kind of crowded now, and we don't want to also do crowded up anymore. You want to kind of renew some of this stuff, and then that can help you make a decision now, like right at this moment. Right here, we know we have a daily number 1 signal, which might be strong, it might not, but at least we can just label it and say, this is a daily one, and it could be a support if we want to buy on this pound dollar. So we can just say daily number 1. And we have here, we can draw another support just to kind of see if we get a nice buy entry, because that's really what we're looking for right now. If we look at 1 hour, we have a number 3, and hopefully this number 2 will give us our buy entry, and then that's it, because we already missed our sell entry, so there's nothing we can do right now. And then I go to my 4 hours, and then this is already hitting that, so that's good. And what else can we draw so that we can be confident? Here we have a gap, but it's already filling it, so that's no longer that much stronger. What else can we do in here? Let's see. Sorry. So the market went up and then eventually came back down again. Let me draw, we can draw this support over here, like all of this right here. And then you can also label that as well. You can just say 4-hour support. And then that's it. And then you go your 1 hour and then look for something under your 1 hour. And then just to see if we get a buy signal that is good enough for us to enter. So we know that we're in a nice support. We have a number 3 here. So at least we want to go again with that cycle to buy. And that's all. We already sold. We kind of already filled in all of this drop. We still have a little bit over here that we need to fill, that needs to meet this. And then that's it. So if we buy, we know this is some level to get out. And if we also buy, possibly, somewhere around here too. So if we want to buy, some of us might not hold all this long, but at least we already know that we need to get out somewhere around here. So if we want to go back to 15 minutes, which I recommend more than 5, what do you want to do? We're already getting the number 3 here, close to a nice support, but we have to wait until we actually closes above on top of our moving average. And at least we're going with the 1 hour candle. The 1 hour candle needs to be going green in order for us to enter on this entry over here, on this number 3 under the 15-minute entry. Any questions so far? Like if you want to buy, it's always the best that our RSI in every single time frame is up 40 or above. Those are the safest buy, especially after a nice drop. We want to do that. But right now, if anything, all we're looking is to sell entries. So like here, we had a small drop. Here we had another one. So if you want to go to 15 minutes, then you can look for sell entries. We had one here. All you have to do is look for sell entries only after all of your RSIs are 40 or above. Then you will start looking for buy entries, because that's the safest way we can go with that. So if I look at gold, oh my God, this thing just keeps dropping. Oh geez. If I see that we're in a nice strong sell, then this one would have been a nice sell. This number 3 would have been a nice sell. And then it just keeps on dropping and dropping. Let's say here we don't have any sell entry, but if we use our other VTA, we wait for a candle to break or close below the moving average, and then we would enter right after the break. Then we can enter like that too if we don't have a signal. And then if we're going along with all of these candles, then obviously we're going along with the trend, then we can do that. That right here would have been a nice entry as well to sell. But there's nothing else right now. We missed all of these entries. Pound dollar gave us a nice sell entry here, and I didn't get in. Any question, guys, that you want to know in particular? I know I talked a lot. Any questions? I mean, there are times, again, when the market gives us crappy entries, and that it's not your fault. It's nobody's fault. It's just really, the market is just really ranging very badly. And one of the things that I really want to show you is, let me just erase all of this right now. When you see the market ranging a lot, is try to take a look at the candles under your 4 hours and then under your 1 hour, and then kind of see what is doing in between the moving average. So let's say here you have a number 2 right over here. So then all you want to do, if this number 2 is not broken, you kind of want to maybe look for buy entries under the 1 hour until you finally get a nice other sell entry. And then from there on, you want to start looking for sell entries under the 1 hour. So kind of you can do that like that. But sometimes like you see this daily candle is humongous. It's huge. And the market kind of traded inside this candle for a very long time until now it hasn't even broken. Like the body itself need to close below this big candle for this thing to actually keep on dropping even more. But the market was trading inside this big daily 1 candle right over here. So take a look at your daily. Don't be afraid to go higher time frames and take a look at what the market is actually doing. If you take a look at your daily and you see that the candles are running below the moving average for a long time, then maybe you know that you're in a downtrend on a daily candle. So then all you have to do is kind of say, you know what, I'm below the moving average. Then maybe I want to look for sell entries under the 1 hour or 4 hours and stuff like that. I mean, if you take a look at here, the market was able to close below the moving average, and then all that it did was trading right below for days. 1, 2, 3, 4, 5, 6, 7, 8, like 8 days it traded below this moving average. So the market all it was doing was actually going lower and lower. So then once you know what your daily is doing, then you can actually determine what you can do under your 1 hour and your 4 hours. It all depends. I put it sometimes on auto, so I don't have to doubt my entries. Like if it enters for me, then I'll just have to deal with it after it enters for me. So I like sometimes leave it, put it in auto, so that way I don't hesitate when it gives me an entry. I don't hesitate on that entry, kind of analyze it and then see if it's going to be good or not. So that's why it's good to do your homework beforehand, and then you already know you have good resistance and good support. And then you say, you know what, when it gives me that auto, I accept, just enter for me quickly, so we don't avoid, waste more time pretty much. So it is nice. I do suggest put it in on auto. I mean, I have it on auto right now. Like I said, it's not working. I don't know what I did to it. Let me know if it's working on your side, but it's good to put it on auto because you don't hesitate on getting in and doubt. And then, so this is one of the good things about that. You kind of like, if you enter on in a wrong way or wrong direction, then you can quickly act on it, get out or something. But if you actually went into the right direction, then you're good to go. You didn't hesitate on that entry, and then just enter for you, and then that's it. Like I said, you deal with it later. Like here, oh my God, another 100 and something eights. Okay, good. All right. So yeah, I know I said I was not going to be any more updates, but I don't know what I did to it. So the guy has to, when you bring your car to the mechanic, they fix something and then they mess up something else. Well, this is kind of like that. It's been going back and forth. Jack, let's see. Well, I mean, Jack, it's kind of hard to, to say that they're all gonna be winning entries. I mean, there's no guarantee in the market. Remember, this is all a probability market. So it's all about probabilities. And even if we put it on auto or we enter ourselves, we will never know 100% that we're going to have a winning trade. We will never know. yes, we're going based on technicals and we're going based on what the market could be doing, but there are times that we just don't know what the market wants to do, you know. So if we put it on auto, like I said, I mean, it's all based on probabilities, but what if back day, you know, a few days back, the market was kind of choppy, it was bad, you know, like you're able to tell it went down and it went back up again. And you kind of had some few losses in here, but in here, if you would have entered and then actually maybe hold as much as, maybe not this whole thing, but maybe hold as much as you can, then you would have made it all up. I mean, like, it's all about probabilities. What if, let me just, what if we have, even if we have 30%, let's talk about numbers here. So we have 10 trades. We take 10 trades. Oh my God, this gold. Let me put this in here where we have this. So we're gonna do this based on 10 trades. And then now, what if trade number 1 was negative 20 pips, right? Trade number 1, and then trade number 2. And this is, we have to be very strict with our stop losses. You know, we have to really, you know, listen to them. You know, remember, if we got a sell entry here, we know that we're gonna put in our stop loss just a little bit above our number 2. And if it took us out, it took us out. But then if we enter here and then, you know, it would have never stopped us out. And then it just, I mean, this thing just keeps on running and running. One of the things that I want to tell you is, let's just go over this, you know. So trade number 2, you actually made positive, we're gonna call it 40 pips. Hey, why this thing didn't, you need to see about the numbers. So, okay, so now we're 20 pips positive. And every day, let's say you say you're gonna have 20 pips negative no matter what, and then you're gonna let your other trades run as much as you can. And then that is when you start seeing the difference. All about probability. So again, you have another 20 pips in here. You know, we kind of maybe be, you know, really, so another 20 pips. So this is, you know, again, all probability. So now we're break even. We haven't had a loss. And here now, trade number 4 maybe is one of those nice entries that the market just keeps on running and running, and maybe we happen to get 60 pips on that. So now we're positive. Oh my God, what is this thing? Why is this doing to me like this? Now we're positive plus 60. So, you know, let's say one day, every day you take only one trade. So today you were negative, but tomorrow you're positive, and then the next day you were negative. All you have to know when you come into this, you have to set your mindset. You know what? This is a probabilities game. You already have to know this. Yes, you have a winning set mind that, you know, you're always gonna win, but not every time you're going to win. But now we're positive 40 pips in here. So you're like, okay, you know, this is in one week, and then trade number 5, let's say, you know, this is weekly, you know, daily. Then trade number 5, we were maybe negative another 20. I mean, you know, we're trying to go with probabilities here. So at the end of the week, maybe we were here. So right here is break even, right? Right here we were positive 20. Here we break even. Then here we actually 60 pips, and then here negative 20, right? So we'll be positive 40 pips, right? So there are days that we win, there are days that we lose, but this is all probabilities game. And like, there were these trades, maybe, you know, we could have maybe lost a little bit here and there, but then finally we get a break, and then we get some really good entries. So there are days that the market is good and there are days that it's not. I mean, you know, when I show you my trades that I've been taking the challenge, I mean, well, it's not in here, but you can see that there were days that I lost. There were days that I made $40. There are days that I made 900. There are days that I made 400. I mean, it's all, I mean, you know, I mean, we're looking at the same market, but yes, there are people that make more and make people that lose more. I mean, it all depends. But if you take it that way, then you're good. You know, don't feel bad that one day you lost, the next day. I mean, yeah, we have to take advantage of these nice trades. I mean, right here, this is when actually the market is doing something good. When is it gonna do that? I mean, sometimes we don't even know. I mean, here we're able to tell this was another nice run. We had crappy trades over here. This was another nice run. And it's all about that. It's all about how we see the market and how we, you know, just how we do it. I mean, yeah, I mean, one trade a day or two the most would be nice. If you're looking at one pair or you're looking at two pairs, it's nice. I mean, pound yen is nice, pound dollar is nice, but you know, there are days where they give us nice trades and there are days that they're not. I mean, take a look in here. We had a lot of ones where they gave us entries, and if you would have entered here, maybe this one would have worked out, but maybe this one haven't. This one also was kind of bad. This one also was bad if you got in. So I mean, if let's say three trades a day, you would have got money in here, but then maybe kind of lost in here. I mean, it all depends. And 3 hours, yeah, 3 hours per day is good to trade. But you just have to know that when you look at in three hours, you might be lucky and get a nice entry, and then you might get days that you might not get a good entry. I mean, like, let's say here, this was the entry of the day pretty much right over here, and it happened, I mean, we already know it happened 1 2 3 4 5 6 7 8, almost 8 hours ago. This was the entry of the day. If we missed it, well, there's nothing we can do. Now, the other entry of the day that we just missed right now was this one right over here. This was the entry of the day, pretty much. It didn't run that much, but it's still. Then for gold, the entry of the day was also 1 2 3 4 5 6 7 hours ago also. Unless let me highlight this right over here, unless we go to the 15 minutes. So let's say you missed this entry of the day and you're like, crap, you know, I'm only trading 3 hours a day and then I already missed an entry. And then for us to get another entry, we have to wait for a lot of things. We have to wait, let's say, for this candle to turn green, to stop, to turn green. So that'll be 1 hour, another 2 hours. If this candle was closed green going up, then we will have to wait one more extra hour. But we will have to wait 3 hours for a nice opportunity to happen, right? So then we will have to go to the 15 minutes. You know what? Let me highlight this one, this candle right here, or these two candles, these 2 hour candles right here. And we're gonna go to the 15 minutes and see if we got an entry. The only entry we would have missed this number one, the only entry that would have been okay under the 1 hour would have been that this candle closed below. Let me, this candle right here closed below, and then the entry would have been right here, and then we would have been able to get in again. That would have been the only entry. And then one of the things that I want to tell you is, so we can hold trades longer. And then, like I said, I was a scalper, and to me it's really hard to hold trades. But if we enter under the 1 hour, look at the 15 minutes, and then when the 15-minute candle gets out of the moving average and breaks in, like let's say we had this candle that closed above, and if the next candle breaks above, then that would be our exit if we're entering under the 1 hour. That will be the only way I can tell you to learn how to hold a trade. So right now, so yeah, if we trade in 3 hours, we kind of missed our if let's say, we missed our entry over here, then maybe the only way I can tell you is move on to a lower time frame, go based that you're going based on the 1 hour trend, and then look for an entry under the 15 minutes if you only trade in 3 hours. I mean, there's nothing else we can do. We missed our boat pretty much. I mean, if we go to here to pound dollar again, so this entry was not too long ago, so this was the only chance. Euro dollar also we're looking at the 1 hour, 1, 2, 3, 4, 5, 6 hours ago, this happened. And if we would have missed this entry right here, then my only suggestion is go and take a look at 15 minutes and see what 50, and if you want to risk it, you can also go to your 5 minute, but only if you're going with the trend that the market still below the moving average. So let's take a look at 15 minutes if we would have gotten another chance to get in, to re-enter. And the only chance would have been again here. You see how the market came out, went back into our moving average, went back on track, and then this would have been the entry to re-enter on that trend. So that would have been another 32 pips. Does anybody get me? So write this down. If you missed an entry on 1 hour, you missed it, and you're saying, it might take you a longer time, to re-enter again, then go to your 15 minutes only based on your 1 hour trend. Go based on the 1 hour trend, and then re-enter again when the market gives you an entry, when it breaks your 5 simple moving average. And this has to be when you see a strong trend. Don't be entering like that if you don't see a strong trend. Your RSI, you're going along with your 2 candles, 4 hours and daily candle, you're going along with them. You're like, this thing keeps on going lower, I'm gonna get in. And you can risk it as long as it doesn't go. Your exit point will be when another candle breaks above or closes above your moving average. That will be your exit point, and then that's it. Right now, you might say, oh my God, this thing is not giving us a break. It just keeps on going. This is another entry point, but I think it might be too low already. This is already like, we're really far out now. The best would have been, but 4 hours, yeah, we kind of missed our boat. So this is the only thing I can advise you with that. Right now, pound yen has a strong candle here, and our entry point, it's not going to happen maybe in another 2 hours. So again, if we highlight this over here, we can move on maybe to 15 minutes and maybe find an entry. And then this would have been another entry under the 15 minutes right here. Let's put in our moving average to see maybe what other entry could have been. But this would have been our second entry. If you miss this under the 1 hour, then you have to wait until the market retraces back and then give us a second entry to re-enter again. That will be the only option, guys. So you don't miss your boat kind of thing, and then you don't miss your opportunity of entering in case you're only trading 3 hours and stuff like that. Do you agree? So now we're going to draw our lines. Always remember our gap. You take a look at one big candle, and you're going to look to your left, you're going to look to your right, and you're going to see if there's a gap, because they need to meet the right and the left. So Jack, 3-1-1 pattern. What do you mean? Like we get a 3 and then another 1 to sell on top? like this ones over here. Is that what you're talking about? And if we want to go against, I'm not sure. Okay, yeah. I mean, yeah, definitely those are good trades. Yeah. um I mean, yeah, like I said, this thing, the market does this every time, those patterns. So if you remember and imagine those patterns again and again, once you see them, you're good to go, you're good to trade again. But always take a look at your 4 hours, see what your 4 hour, if you got a signal on your 4 hours, and kind of follow that too, and draw your lines and your support or resistance. And now if we want to buy, we seriously need to wait for all this to be under the four, above 40. I mean, it's the only way that I could say I want to buy. Let's see what else. What a shame I didn't enter here. 50. So this right here, I mean, we were able to tell the market had a nice run up and it came back down again. I mean, you always have to know that, I mean, the market's always going to do something like this. And then you know that it's best for you to look for sell entries than the buy entries, unless you see them that is really hitting a nice support, and then you were able to grab some pips on that. But if you really want to be looking down and kind of be going down the path of selling and selling and selling, because you know the market has to fill in this gap. So kind of always look at that. If you really want to go something against, ask your question, ask yourself, is this really that good entry that I really want to get into and risk money and risk, put so much effort that it's not going to work. But yeah, put it on auto. It's really nice because it gives then you don't hesitate no more. You enter and then you kind of like, oh shit, let me see if it's a good entry. I mean, obviously you need to be present, working on the market, take analyzing, and then if you see that it's not really a good entry, you just have to quickly get out. And if you use auto, then you have to know that you have to get out. Even if you're negative, but this thing is going against you, you need to know that you need to get out. And that's the only option I can give you. But it's good because it would take away that emotion part of hesitating and maybe should I get in, maybe should I get out, or like type of thing of getting in, or we always hesitate. And it's normal. We always do that, no matter how many years of trading you have under your belt. It's always that part of, oof, is this good? So I like it because then I just have to deal with it after that. Anyways, we always have always make sure that, it kind of, the best ones are the ones that they actually close below the moving average, like this one right here. Those are the best entries, like this number 2, this candle closed below and actually, went below this candle. So it worked out nicely. We call this, this candle that goes over the previous candle, that those are good candles. But if it takes so long to give you that entry, like 4-3 candles, be careful with that. Like maybe like this candle, you see, it took 2 candles to actually break this candle. So you would have gotten the entry here. I mean, it works, but it kind of, it takes a little bit longer to just to make sure. Plus this entry over here, this would be the first candle that's actually going to close below the moving average. So now you know that that entry that you get that is already below the moving average, those are the most higher probable entries that is going to work out, that type of thing. Always also be careful. Let's say you get this number 1 over here, and then you see this big candle going up is only going to cover pretty much what the market is going to do, is going to cover. Remember, we have a gap right over here. So the market, it wants to cover up this gap. And then from there, if you're able to tell, what did the market do? It touched it and then it went back up again. So be careful when you get entries with big candles, and then draw your gap line, because you know that is going to only cover it and then it's going to bounce off from there, especially if you have a number 3 right here. I mean, take a look at this one. You would have gotten maybe the entry here, but if you put in your stop loss, it would have taken maybe 1, 2, 3, 4 hours and few hours to actually work out. So you kind of also have to know that too, that you have to let the trades work out if you enter on a higher time frame. If you enter on a smaller time frame, then that's a big difference too. But I like those trades, like this one, and then we had a nice strong candle that closed above, then the entry would have been right here, and then boom, that worked out for how many pips? I mean, 80 something pips. So yeah, if you have this on automatic, it's already taking that pain away from you of hesitation, of fear of entering the market. That's already getting rid of that pain. Then the next pain, I mean, it is a pain. Then the next pain is dealing with if this trade is going to work or not, with that loss. And we just have to grow thick skin when we're doing this and not be afraid anymore and just do it. I mean, it is just money, you're not losing a leg, you're not losing an arm. So don't be afraid. You just gotta do it. And then it's just all probabilities. We already talked about that. One day you might lose, but then the next day you might get in on the best trade ever, and you might get 100 pips on that or 80 pips on that. So I know you have to level it out, and there are days you're gonna make more than others. Any question, guys? I think I'm gonna cut it short now because I think I went over what I really wanted to go over. With the trend lines. I hope that's clear to you now, how we can draw them, the trend, the patterns, the trend lines, our supported resistance, how you can label them. Like, let's say here, I like to label like the whole candle. Like, you take a look at the candle right here, your bullish candle that gives you the signal, and then you kind of like box it up. That will be your resistance, your box of resistance right here. And then this line over here is actually my line of gap where the market needs to come up again. So I have in here, not only might have a strong resistance of a candle, but I also have a gap where the market needs to come back and fill. So if I get an entry inside here, I know this is strong, but then stronger will be if I draw my resistance under the one daily 4 hours, you kind of move on from there. Here, let's say you box this up, this candle right here, and then when the market comes back in here, that this is a 4-hour resistance zone where that it's a possible resell entry type of thing. But yeah, if we want to stick for longer period of time or 2 hours, then we will have to wait for this, let's say this number 2 entry right here. For this candle, if this candle closes green, well, we need the moving average to move closer to the candle, because that would be the only entry that would trigger the entry, right? That it actually goes over my moving average, that for 1 hour and 4 hours is 40 or above. And then that will be the only way. And then the 4 hours is actually going in my direction. So that will be the only way that it would trigger an entry. Other than that, it would not trigger an entry. Any questions? Anybody have any questions? Yeah, I mean, you guys actually, but like you mean, Nicolas, to put like to trade a pair like among a group, like a chat room, like among you guys. I mean, you guys can do that, and then once in a while, I can come in and trade. I mean, the only thing is I trade the European session, and I like to trade by myself because sometimes when I'm trading with other people, I mean, I kind of, I don't know, I feel weird, but yeah, it's like you get distracted. But if you guys can set it up, I mean, you can set up, whoever is willing to set it up, like, you guys can set it up, send the link, and then I can come in, sometimes here and there, and then trade. We can trade and stuff like that. That'll be good. But or I mean, I know there. I mean, I don't know what else can be done. I mean, I know maybe you guys can set up a Zoom group or something that, a certain time of hour, and then we can, all come in and trade together once in a while. I could do that, but maybe there could be someone that leads it, you know. But again, we already have this. Um, all right. I mean, someone take the initiative. Let me know. Set it up and let me know, and then I'll send you. I mean, if you want to set it up now, and then you can guys send the link now. You could do that, and but yeah, I trade mostly the European because obviously, sometimes I miss trading the New York session. Plus, it's already, I get kind of gets late in here, and then I don't want to be trading at night. Yeah, Discord or Telegram would be good. Someone set it up. You guys can set it up. One of you take the lead to set it up, and then Gino, the way this works is, obviously, I set it up by giving out rules, so it would only trigger after it has, so like this number one signal, it would only trigger an entry if I'm sorry, I kind of blanked out. A bearish candle closes first, and then it would end, and it has already crossed the moving average. So the trigger will be entry over here. This would be the entry for this entry right here. It would have given us an entry right over here, right over here. This would have been the entry. Then this number 3 entry would have been somewhere around here. Actually, when it is crossing the moving average, that would have been the entry for this one. Or obviously has to meet other requirements, RSI and other little things like that. This entry, this number 2, has to wait first for a bearish candle, and then the entry would have been right over here. This would have been the entry for this one. So yeah, those are the rules for the entries using the signal. So like when you put it automatically, like I said, it takes out the pain of doubting that entry. So it will just enter for you, and then you will have to deal with it after that, just to see if if it was good or not. Well, it stops when you stop it. I mean, what do you mean? Well, it sells. It would, if you have it on manual, it will give you an alert. But if it has it in auto, it will just enter for you, and then you have to, be in the market, like be here, and then say, I'll get out. Or if you want to put 30 pips on that, you can put 30 pips or 50 pips, or and then that's it. But the best guys that I can recommend that I'm working on that myself is holding trades for a longer period of time. So let's say we got this sell entry here, and then you get scared. The only way that I can say is you can move on to your 15 minutes. Where is this? And if a candle closes above the moving average and then the next one breaks, then that would be your exit. You know, if you want to be under the safe zone. So then it would have happened here. And then obviously give you another sell entry here. That could be one way of you holding a trade a little bit longer. Looking at your 15 minutes, and then once a candle closes above that moving average and it breaks above, then that will be your exit point. Okay, guys, who's gonna try to do that so you can hold a little bit longer on your trades? So here, this would have been your, then it would have been somewhere around here. So if you enter on right here, your entry would have been triggered right over here. Then your exit would have been here. Then of course you would have missed out on here. But at least maybe, you know, you run it for 50 pips, a little bit more, or you can take half in here and then see if you can let it run for a little bit longer. The other strategy that I'm working on is this. The market has to come back and fill in this gap, right? Like if I put in a line here, the market has to come back and fill in the gap, and then it will come back down. So you can actually put in, you know, your stop losses, or, you know, a little bit higher. But if the market just keeps on going and dropping, and you can just try to let it go. I mean, I'm kind of working on that, see how we can let these trades run longer. But of course, we have to put in a support and resistance. We have stuff in here that it kind of stopped the market out. But the only way I can tell you right now would be whenever you get like here, if we have 15 minutes, we take a look at 15 minutes. Whenever 15-minute candle closes below the moving average, then that's where we have to get out. And that's it. That's the, you know, so then we would just keep on holding and holding and holding and holding. Maybe up to here could have been, maybe you would get out here, but we had not a candle yet to close above the moving average. So we maybe will keep on holding this trade. Any questions? Obviously, if you look at 5 minutes, then in 5 minutes, it might actually do it faster. Yeah. Well, not even. It closed above, but it didn't. Well, here it did close above. In here it closed above, but there was no candle that went beyond above it. So that was good. Again, if you missed an entry under the 1 hour, you can always take a look at your 5 or 15 minutes to re-enter again. So maybe here would have been another entry right over here. Here, no, because this was too much of a big candle. Maybe here would have been another entry whenever a candle closes below the moving average. And then you would just, I'm using the 5 simple moving average. So whenever you see a strong trend again that you missed your entry, then go back to 5 and 15 minutes to see if you can find a good entry to re-enter again. Again, those are tricky, but if you're not willing to wait for another 2 hours or so, then that would be a recommendation for you to do. Of course, always again, make sure you're going with the candle direction. Make sure you're going with the nice RSI direction. They're all in red. That, you know, this is not mixed. That this is green and this is red. You know, you kind of want to go with that direction, making sure that you enter in a good direction in 5-15 minutes. All right, guys. So if you don't have any more questions, well, yeah, I mean, the 5, you know, it's always, I think the 5 is really good. I mean, so I'm using right now the 13, but the 21 is also good. The 21, because, you know, if we are below the 21, like let's say you got a buy entry under the 5 minute, but then remember we have those bubbles, we have this gap in here. We know that this is going to be what a support, right? A resistance over here. So yes, you know, you can have them to show it so you can see it. But if it's too much of a distraction, you're moving average, then you don't have to see them. You know, it's really up to you. You know, the most comfortable that you can get. I mean, I like the 5 because obviously, you know, for me to see, I need to make sure that I'm breaking through the 5 and then I have a good entry. But you know, we don't want to cluster our graphs. We don't want to have too many things in there because then we kind of miss out on candles and stuff like that. Why are you laughing, Gino? What's happening? Is your chart very crowded? No, no, don't look at so many things. You know, once you learn, you know, you need to learn your candles. If you have the signals and you want moving average, and then that's it. I mean, you don't need too many things. You know, not too many things is gonna give you the perfect market direction or perfect. There's no perfect here. We're not looking for perfection. We're looking for high probable entries that we can have, and then that's it, guys. I mean, yes, Jack, you got it. Yeah, Gino. I mean, do you really think by looking at so many things, you know, it's really gonna give you the 100%, you know, extra info that you need? No, I mean, if you draw your support and resistance and your gaps, I mean, seriously, that's all you need to do. If you draw your um, IPA levels, that's also good. And then that's it. If you're going with 4 hour market direction, I mean, I know you trade 5, 15 minutes. Again, you know, those things, you know, they're tricky, you know, when you take a look at shorter time frames. But let's say if you get buy entries under the 5 minute, we know that we need to be at least above 40 on all of these levels under the RSI. That would be the only good entry that we can make under the 5 minute. We're still on a strong downtrend. So we shouldn't even be looking at any buy entry under the 5 if all of these RSIs are below, you know, I mean, to see where they are. I mean, there's no question about that. You know, we can tell, we can still see market goes up and then drops again. And if you take a look at your 4 hours and your daily, do you really want to go against them? I mean, it's just like you trying to, I don't even know. I mean, what's a good example? I mean, you're trying to fight a bull. Who's gonna win, you know? It's, you can't be doing that. You can't go against something like this, you know. So try to see, get a feeling of the market, try to see what the market is doing, and then that's where you get the feeling and then say, you know what, this thing doesn't look good, let me just get out. No, Jack, you need to trust yourself. You need to build your own confidence because I'm never gonna be there, you know. I mean, it's like I'm guiding you, but you always, you know, at the end of the day, you're the only one who can make the decision. I mean, pretty much you and I are looking at the same thing. You and I looking, have the same tools. And funny thing is, yes, I mean, even if you have 100 students and all of them have the same tools, but it's all about how they see the market. We all see it the same way. I mean, we all have the same candles, the same price, the same everything. But why only half of them could be perform good and the other half might not? I mean, it's all about mindset. It's all about how you feel, how about you trusting yourself and believing in yourself. I mean, it's all about that, you know. At the end of the day, it's all about being mind, you know, your mind plays tricks on you. So um Canyon is reversing. Remember, we had a nice strong, we're still below. We have a big candle right here. So it's reversing because you see it under the 5 minute, but you know, right now we need to see, in order for us to buy, we need to make sure that this is really above 40. No, I know, but I mean, I'm telling you for like everybody, you know, like it's, we need to build our own trust, believe in ourselves and confidence. And we all have the same tools now, and we shouldn't really be if if I lose, well, I'm pretty sure you will lose too. If I make a win, well, I'm pretty sure you also make a win, you know. But at the end of the day, yeah, I know, you know, but you know, you do have, I mean, the RSI, I know you have the older version, but even you're here and then, you know, you should be able to actually trade. You don't have the VTA, but you should be able to trade without it, you know. You know, the VTA is great for, you know, for fear. I mean, it's just giving you the alert already. It's kind of like if you see the market's going up, but it's not meeting the requirements, well, the VTA is there, you know, already meeting the requirements for you, and you don't make a mistake. And if sometimes it does still make a mistake, you know. But again, we all have the same tools and we should all be able to do well on this as well. But it's all about the mindset, guys. It really is. I mean, seriously. So let's try to keep it simple and don't hesitate on entering. There are some entries that are really, you know, that are we shouldn't be entering, that are not so great, but still, um, you know, we already have something good right in front of us, and we shouldn't be able to lose. And like I said, I'm done with trading 5 minutes. It's too crazy. Unless the only option would be if we're going with a nice trend, then you can use 5-15 minutes to see if you can re-enter again on a good entry. Like let's say this was a nice entry on 15 minutes and it worked out nice. This would have not been a nice entry right here. This should have been a no entry. Let's see where this was in 1 hour. Okay, so it was here under this, it was this 1 hour candle. This 1 hour candle was green, but we were still below the moving average. Okay, guys? And so this buy entry under the 15 minutes was, it would have given it to you maybe, but it would have not worked out very nicely for too long. I mean, if you have entered, it would have only worked out, I mean, it's 20 pips. That's not bad. And then the other nice entry would have been right here for 66 pips. That's not bad either. Any question, guys? So you can set up anything, you know, set up a group, and, you know, kind of let me know, and then I can come in once in a while. We're still gonna have these trainings, you know, I'll try to do them weekly, but sometimes in 1 hour we might not get a chance to get in the market. And I really don't want to go back into the habit of trading 5 and 15 minutes. I mean, I know we will get opportunities in there, but it's like I really want to avoid it right now, because I mean, sometimes I do go back, and then I really want to trade just 1 hour and have my VTA give me the alerts, and then that's it. Oh, by the way, I do have to fix it now. So I have to, after this, I'm gonna fix it up so I can update the new ones, and I'll let you know. But any questions on the VTA? Listen, guys, on the VTA, I try to make it better for you now. I put the descriptions nicely so you can actually now understand it better. Like before, it was kind of messy, or you know. So here, you actually you have in here maximal candles to break signal 1. So if you put in 2 maximal candles, now signal 1 time frame entry. So in here you say, you know, you want to use 15 minutes or half an hour or 1 hour. Oh, we only see the chart, not the properties of the, oh, I wonder why. So you don't see the properties. Interesting. Okay. Niche. What about here? Now do you see this? All right, nice. So, like I said, I made it better now for the EA, with the names. If you can see now, it's much clearer that you can able to see what happens. You can set it up nicely. So, um, I know. So here, let's say signal one. So now you can say maximal candles to break signal one. You're gonna choose either 3 or 2. Signal one time frame entry here, 1 hour. Moving average trend. We're gonna for one signal. We're gonna choose the 4 hours. And the RSI time entry right here, 40 and 60. Then the RSI second confirmation for RSI. We're gonna use the 4 hours. It needs to be above 40 and below 60. And candle direction has to be 1 hour, because remember, under the 1 hour, we need to make sure that the candle is bullish or bearish in order to enter. And then here, for right now, actually put in 1 hour. I have, or 4 hours. I mean, you can put it 4 hours. So we also go with the 4-hour candle direction. But now, like I said, if you take a look, it's nicely done for you to guys to understand it much, much better. And you see this thing just keeps on dropping and dropping, and we just missed our chance. Wow. So we would have, if you would have been looking at 15 minutes, this would have been another entry for 24 pips. Oh my goodness, Jesus Christ. Oh, again, we just had news right now, right? We just had 1 minute ago, there's going on some press. So yeah, oops. So we just had news right now, that's why. But if we were trading on a smaller time frame, selling, looking for sell entries, I mean, we would have gotten a bunch. We just would have gotten a nice sell entry here on the 5 minute. We worked out for 30 pips. Oh my goodness. But this was news anyways. How about gold? You're gonna find the updates. Remember the updates I said yesterday on the email that you're gonna find them under the KISS method, whatever, whatever method that was that I used for the VT8, and then the other one. It's gonna be under the folder in the KISS method folder files. That's gonna be in there, and then the 10 pair challenge method. I mean, it's always gonna be there too, the new ones. But again, I have to update this one, the VTA 1, 2, 3. I think the trend is working fine. This one is working fine. The other one is the one that's kind of funny. But yeah, you can find the updates there, but I still have to update the other one again. I'm sorry about that. So let's say right now it would trigger an entry right at this moment to enter under the 5 minute. The only thing is this thing really, it was news, kind of news things, but they would have given us an entry right now. If we would have set it up under the 15 minutes. I'm sorry, for 5 minute on gold. Question, guys, questions. Yeah, with this election, this is gonna be nuts. I mean, it's kind of exciting, but you're gonna have to be very careful. So I'm gonna call it a day, but then I think next week I'm gonna start to do a challenge. If you deposit $100, how much can you make with $100 trading forex? So I'm gonna see if I can do that challenge soon. I'm gonna have to open actually a broker that is not Oanda, because Oanda has too many rules. And anyways, I'm looking for a broker where I can actually open an account that is reliable, has good spreads, and then that way I'm going to be able to do the 100 challenge. And then I'm going to remove my money from Wanda, because it just sucks now. I mean, they were really good back in the day when I started, but now they just have too many rules, too many stuff that is just sucks. But anyways, yeah, I want to do that. See how much you can trade with $100. A lot of people have been asking for that, like how much you can actually trade with $100. If you don't have enough capital to invest in forex, then I think I'm gonna do that. Trade the 100, see how much we can flip it. You know, how long it would take to flip that account. And then I will do another one with 500, see how much you can flip that account, and then kind of do that so we can work on that. But if you don't have any questions, I think we'll call it a day. I hope I went over with stuff that you actually needed to clear up. Yeah, actually, Gino, yeah, I'm researching about them, and then today I was opening the account, but they need like paperwork and stuff like that, so I need to send them like pictures and stuff like that. But yeah, actually, I'm looking into that. All right, guys, have a good one, and then I will see you soon. Enjoy the rest of the week and be careful with the markets. Unfortunately, today I didn't trade at all. I guess we all missed the trade. You're welcome, Nicolas, and let's hope. Oh goodness, new president, or maybe the old one, the same one we have. All right, guys, have a good one. Talk to you soon.